All right, welcome back everyone. And in today's video, we have some massive news to talk about. Alex Karp just went on CNBC. He talked a lot about AI sovereignty, their deal with NVIDIA and how they're going to tackle that. But that's not what we're going to talk about today. We're only going to be talking about one sentence that he said during that interview that a lot of people overlooked. But that sentence changes everything for Palantir. So let's not mess around. Let's go right into it. Of course, I published an article that goes into all of it that we're going to be covering today. But first things first, let's go and listen to the clip here. I'm going to go back a bit.
That's like, and by the way, it may be somewhat, maybe the crazy person that still only cares about free cash flow, but we have more business than we can apply. And we have, look, if you just look at our financials, right, you can see like 2 years out, you can see $15-18 billion in free cash flow.
$15 to $18 billion in free cash flow 2 years out. Now, for those of you that don't know, he's likely talking about adjusted free cash flow, which only adds back, some payroll taxes associated with SPC. It's not like some massive adjustment. That is a 5x of free cash flow in 2 years. And we're not talking about a company that has, 5% margins and they're going to expand margins and increase free cash flow like that. No, Palantir already has, above 50% adjusted free cash flow margins. So it's going to be coming from somewhere else. So I want to take you through why I believe that it's absolutely crazy. I'm going to show you why it is. And most importantly, I'm going to tell you why I believe that it's credible. And to do that, we have to go through memory lane. But before that, I want to show you, a lot of people have been asking me, what is your new fair value for Palantir after hearing that? And here it is, $341 as of July 5th, 2026. Now, obviously that sounds very crazy. That is 164% upside just for fair value. And it might sound really crazy right now, but by the end of this video, you're not going to think that it sounds crazy. Even if you're a Palantir bear, like it is undeniable. And even my previous fair value target for Palantir, it increased massively, I think from like 190 to 270 after Q1 earnings, which were massive in their own rights. It still pales in comparison to what it's worth now. And speaking of which, I decided to make my previous, after Q1 2026 earnings, I wrote a massive article. It is now completely free. I removed the paywall. You can get the valuation model, everything. So I'm going to leave a link in the description. As a way, to just introduce people to Palantir, their business model. After reading this, you're going to know everything you need to know about Palantir. And also you're gonna know what my Substack is all about, how much in depth I go into whenever I write about a company. So it's a bit of a preview. So I made it completely free to read, including the valuation model. It is available for free. Link will be in the description. And with that said, let's get into unpacking what Alex Karp said. But before we get to that, I want to take you through some of the history, because this is not the first time Alex Karp, says something that seems outrageous, like, oh my God, how are they gonna reach that? I received some backlash on X when I posted about this, and someone said, if you believe that Palantir is gonna reach, $15 to $18 billion in free cash flow, I have a bridge to sell you, like something like that. And well, let's see how credible it sounds by the end of this video. So, when Palantir went DPO in September of 2020, they announced a key target metric, and that was they're going to grow revenues at a compounded annual growth rate of 30% all the way through 2025. And if you look at, the quarters before the DPO and some quarters after, that seemed like really credible. That's why I think Palantir's stock price started to surge a bit, because on average, revenue growth rate was, close to 50%, like 49% on average, 57%, 43% in Q2 2020, 52%, 40%, 49%, 49%. So by this point, that 30% CAGR, it looked like, okay, well, they might actually reach that. However, what followed after these 2 quarters of 49% was a rapid deceleration of growth rates. If you look post Q2 2021, it was only downhill from there. So you have this 36, 34, 31, 26, 22, 18. And at the bottom in Q2 of 2023, it was 12.7% year-over-year growth. So they went from an average, of almost 50% at the time they went public to decelerating to 12.7%. So obviously, a lot of people that, were wondering, well, how are you going to grow 30% CAGR through 2025 when your revenues are, taking a nosedive? And at the time, in Q2 of 2022, Palantir used to invite a lot more analysts to their earnings calls. And in particular, Sanjit Singh of Morgan Stanley, I don't know if he still covers Palantir, I think he does. He addressed the elephant in the room because people were wondering, what about this 30% CAGR? Because they suddenly just grew quiet about that. They weren't reiterating it. So he said, Alex, I wanted to get your view, not so much on the quarter, but on the longer term framework. I noticed that you guys didn't reiterate the 30% outlook. I thought it was interesting that you guys took back the 30%. And the first sentence that Alex Karp said was, I am driving the company to get to 4.5 billion in 2025. And that 4.5 billion would mean a 33% CAGR from, fiscal year 2020 when they went public. So he sort of not only reiterated it, but also said that, we're going to reach 33% CAGR. We're going to reach 4.5 billion in 2025. And remember, this is what the revenue growth was looking like at the time. It was decelerating every single quarter. However, when they hit the rock bottom at 12.7%, that was also when AIP was launched. And for every single quarter after they hit the rock bottom of 12.7%, it has only been accelerating every single quarter for close to 3 years. After next quarterly earnings, which I think will be in about a month's time, they will likely have accelerated revenues every quarter for 3 years in a row. So when 2025 came around, Palantir hit Alex Karp's target of 4.5 billion, rounded up. It's like 447. I don't know exactly, but rounded up, it is $4.5 billion. So he held that promise, even though at the time it looked completely, not only like improbable, it looked like there's no way that they're gonna reach that 30% CAGR target, but they did, and Alex Karp said that they would. And there's not the only thing that we've been hearing as of late. The CNBC interview was one thing, but what made me raise my fair value was something that he said during Q1 2026 earnings, which was, we are at our limit doing 100% this year, which I'm going to drive the company to do, and maybe we can do 100% next year in the US. So he said that they're gonna grow 100% this year, and then another 100% next year in the US. And the US, at the time of Q1, the latest earnings, is roughly about 80% of total revenue. And we already know that their margins are high. So when you take that 80% and then you grow it, you double it this year, and then you double it again next year, and then you start to extrapolate that, over a 10-year period, with, very high margin, because Palantir has a lot of operating leverage. I mean, it's a very capital light business. Then the previous target I had of 270 roughly, it's not that crazy when you start to extrapolate that, because Palantir's scalability is very, very high. A majority of the revenue growth rate of Palantir, comes from already existing clients. Even if Palantir didn't have a single client in the past year, they still would have grown something like 50%. I don't have the chart exactly in front of me, but they still would have grown very, very quickly, only off the back of, the clients they already had prior to a year ago. So we know that scalability is very, very high. And we know that they are providing value to those customers because their existing customers are the ones providing all the growth. So we know that they're getting value and they want to employ even more Palantir solutions across their enterprises. So we know that it's sticky, it is robust, the growth, and there's a lot of scalability. So whenever they get a new customer, we know that that customer is likely to scale a lot on how much they're spending with Palantir. And we already know that margins are high and they are also ever increasing. So we know that margins are high, they're increasing. We know that revenue growth is high and that revenue growth is expanding. So when you extrapolate it over 10 years, 270 fair value is not that crazy. However, we have that quote that he just said on CNBC. If you look at our financials, you can see 2 years out, $15 to $18 billion in free cash flow. And, it was an 80-minute interview. It's a very important interview in terms of AI. He talks a lot about Anthropic, OpenAI. I'm not going to get into that now, maybe for another video. But that $15 billion is a 5x in 2.75 years. I'm assuming he meant to 2028. So there's a 2.75 periods left, or 2.5 in a month's time, because half of this year would have passed. And the previous target, when he talked about, I'm driving the company to 4.5 billion, that was a 2.5x in 2.5 years, which is impressive. But a 5x in free cash flow in 2.75 years, that's a completely other level. And as I mentioned, adjusted free cash flow margins, they're already at 57% as of Q1 2026. So it's not going to come that much from margin expansion. It's going to come from revenue growth. So when I try to reach, how can they get to $15 billion of adjusted free cash flow? Well, in my valuation model, I use unlevered free cash flow, which accounts for reinvestment needs as well, which in Palantir's case is very low. So it's only slightly lower than adjusted free cash flow. So I started to look at, how do we reach this? Because it's going to be some insane revenue growth that has to be the backbone of this, because margin expansion only gets you that far. Like you can't be 100% margins or even 80% margins tomorrow. Is just unrealistic, impossible even. So it has to come from revenue growth. So I started to model where is it going to come from? Obviously, the US, both the government and commercial side are the two major drivers. So for US government, up until 2028, 80% CAGR. Sounds crazy, I know. But I believe that to reach that, the US government will have to do something like 80%. Obviously, the weightings can change a bit. It's only my best estimate here. And non-US government, surprisingly, is growing very strong. It's also rapidly increasing. So, you have NATO employing a lot of Palantir solutions as well. So I think non-US government, CAGR is something like 54%, but the base is lower. So it's easier to reach than, US government 80%, which is a much higher base. But in total, government will CAGR at 75% in my estimation. Now, the big driver here is US commercial, 136% CAGR. So not only will it double these 2 coming years, it will more than double over the next 2.75 periods, which does crazy things for the revenue associated with US commercial. Non-US commercial, on the other hand, I don't have a lot of faith in. They have not been showing any signs outside of some parts of Asia that, there is robust growth to be had. No, every single quarter, every single earnings call ever since Palantir went public, they've been talking about how Europe, does not want to participate in the AI revolution, and we're seeing that Europe is a big drag. So whatever growth we're having in non-US commercial, it's mostly outside of Europe. But I don't have a lot of high hopes, over the coming 2-3 years that non-US, meaning international revenue will grow by that much. However, they will come around sooner or later. GDP growth is almost non-existent in the Eurozone. So sooner or later, they will have to, start participating, and then this might expand. But I'm not counting on it here in my estimates. Main driver is going to be US commercial. And in total, commercial 112% CAGR, and total revenue CAGR 93%. And here's what that looks like in a chart. And you can see here that it's very, very exponential in nature. So we did 4477. So 4,477 million, or rounded is 4.5 billion. Just like Alex Karp, said that he would drive the company to do, even at when times were looking bleak. So to reach the lower end, $15 billion of adjusted free cash flow, or slightly lower than that unlevered free cash flow, revenues will have to do something like this. So going from 4.5 billion in 2025 to almost 28 billion in 2028. That is massive. But that is what they will have to do to reach what Alex Karp said in this CNBC interview. And I don't think a lot of people paid a lot of attention, because this is massive for the stock. And, fair value, of course, because this is only until 2028. What will this look like in 10 years? Because as we know, we're only in the early innings of the AI revolution. We know that Palantir is playing a big part. And a lot of people ask me, well, isn't the Anthropic going to pose a big threat to Palantir? Isn't OpenAI? Well, the thing that a lot of people seem to misunderstand is that these AI labs, they are obviously doing a lot. Each passing month, we have new products being launched by Anthropic. We have new products being launched by OpenAI. We have Grok coming into the picture. We have other players as well, open source models from China. There's a lot of competition here within the AI labs. And the thing is, Google Gemini as well should be mentioned. While they do serve a lot of products, you don't really want to have vendor lock-in when it comes to these solutions, because for each passing month, it seems that the top model seems to change. Like now Codex is the best, and then a day after, Anthropic launches, Opus 4.8, that becomes the top dog, and then they launch, Fable, and then, whoever is top dog, it seems to vary month to month. So you don't really want to lock in. You want something that is model agnostic, because the model itself is quickly becoming commoditized. And that's what we've been seeing. I mean, there's not a lot of difference between the frontier models these days. It used to be a much bigger deal back in the day. But now, I mean, they're becoming much more sophisticated. There's only, small differences when they are being benchmarked. And they're pouring a lot of capital into, perfecting those models and taking them to the next step. But that next step, it might be by Google, it might be by Anthropic, it might be by OpenAI, it might be a new incumbent, it might be a model from China, it might even be open source. Now even Meta is part of the race, Nvidia is part of the race. Whoever it is changing quickly. So what you want is a platform that is model agnostic, which Palantir is. You can use any model, you can interchange them. You can use a combination of models when you build out solutions on Palantir's platform. And all of that is tied together by the ontology. And as Alex Karp has been saying, you don't really want to give out your IP to these AI model labs. I mean, I think David Sachs made a great point on X. He said that, well, Anthropic had a deal with Figma, which obviously implied that Figma was, sharing a lot of data on what they were doing with Anthropic. And then some time later, Anthropic launched a competitor to Figma. Obviously, they saw where the demand was, and then they just launched a competitor. I think they even had a board member of Figma that resigned 3 days before, Anthropic launched a competitor. And we're seeing increasingly more cases of this where really corporations, they're tired of, paying a lot for tokens, not extracting value, even, having to share their IP. There's a lot of, fear surrounding that. And Palantir solves all of that. Palantir clients, they are increasingly happily spending more on Palantir solutions for each and passing quarter. That's what we're seeing, with the cohort growth, where, it's the old customers driving all the growth, not the new ones. There's a lot of scalability here because they are very satisfied with Palantir solutions. So when you take that into account, and then you look at okay, 28 billion from 4.5 in 2.5 years, what's that gonna look like in 10 years? And then you apply, the ever increasing margin profile, because Palantir, they're not really hiring a lot of people, and their operating costs are fairly fixed. So when you extrapolate that, high margins, high revenue growth rate for 10-year period, then it doesn't really look that crazy when you bring that back to present value. Then this 341 fair value doesn't look as crazy. And over time, these pricing metrics like the price to sales and P ratios, they're also not gonna be looking like that expensive. And also, I just brought in this quote from the Q1 earnings. Our free cash flow this quarter is larger than our revenue a year ago in the same quarter. Think about that. Same company, same people, extended products. It's all being extended, which really goes to show how quickly this company is expanding, how quickly everything around them is changing, and how ahead of the curve they are. So that's CNBC Alex Karp quote. It's not clickbait. It really changes everything. That one forecast, and this is on the lower end, reaching 15 billion. Imagine 18 billion. You would have to revise this upwards by a lot. Completely crazy. And I don't think we are ready. I can't wait for Q2 earnings call to hear what they have to say, to see the results. Absolutely crazy company. I have paywalled this new valuation model. However, as I mentioned, to get up to speed with Palantir post Q1 2026 earnings, completely free. Link in the description. Go and read. I go through everything, all parts of the business. You will, learn everything you need to know. And if you want to read more coverage like this, very in-depth, you can go to my Substack, research.typeofcapital.com. I just published a Mercado Libre research report. Before that, it was Shopify, Sanrio, S&P Global, Robinhood, all of that. You can go and read about that. I even have a SpaceX one pre-IPO. I still think it's relevant today, so you can go and read that. Amazon, the local. I ask you guys what you want to read about, and then I research it in depth and publish it. So please go and read that. And if you want to keep up with my YouTube stuff, you can like and subscribe, and I will see you guys next time. Goodbye, everyone.